Hello, everybody, and welcome to our market update for the first time in March. It is the 1st of March, 2026. Glad to have you with us. It's 5:17 p.m. I know the futures markets are opening in about 43 minutes. Oil, for me, is, of course, the most interesting topic here as we're getting perhaps a supply shock from what's happening over in Iran. In the past, when we've had these kind of situations with geopolitical tension, yes, oil has spiked, but oil then eventually did settle down pretty quickly. So I want to see where we go with that. But let's start where we always do with a look at the NASDAQ. And we had talked about this on Monday. You are probably, or you are definitely seeing some new labels on my chart. I have been very busy this weekend trying to put together something really, really exciting, using the help of AI to use AI in a bit of our chart analysis here. I'll explain to you what some of these symbols are and some of these numbers mean. But let's start where we always do with the NASDAQ. Nothing really to do here. We're still in a bit of a holding pattern here. I mentioned this to you in the past. When price of a security, excuse me, especially an ETF that tracks major names like the NASDAQ does, when it's in this ribbon, I'm really not that interested in taking a position one way or the other. Just to give you, if you're new here, just to give you a quick summary of what we're looking on the chart here, this is the Chandelier Exit, which closely trails, it's not exact, closely trails the 3 ATR. And when we have a trend flip, it moves up this way. So for me to take a long position, generally, I would like to be above here. For me to consider a short position, I want to be below here. So when we get a trend flip to green, I'm looking for longs. When we get a trend flip to red, I'm looking for shorts. Doesn't mean that there aren't situations where I would play or I would take a trade up to the ATR level. But for me, I consider that a little bit of counter trend trading, and that's not something I do often. So there has to be a very compelling case for me to look at that. So NASDAQ not really doing a whole lot. And now let's go over and take a look at crude futures before we move on. And you can see this move that comes in on the 29th of June. And now here's a good time to talk about what I've done here. So that number, I'm going to zoom in a little bit as I have to make it a little bit bigger. You see that where it says AI 80%? So what I've done is taken the velocity system. You all know the system. We're looking for a move above the ribbon for a long, a move below the ribbon for a short, so signifying a longer term trend change. And what this is doing in the chart, if you would like to try the system out, and I hope you will, because I would love some feedback from you on it. The charts will take a little bit longer to load because what it is doing is every time you load a chart, it is looking back however many bars are available on the daily chart on TradingView. So in this case, it's likely thousands of bars. And it is trying to find every other setup or the last 15 setups just to make the charts load a little bit more quickly. The last 15 setups that look similar to this setup here. It is then assessing what happened during those 15 setups and what the likelihood of success was for those 15 setups. And if tomorrow I can kind of write up a short paper on this, just so you have my thinking in the background. Success, the way I've defined it here for the system, is any trade that results in a minimum 5% gain before hitting a stop loss here. And the stop loss we're going to use is the Chandelier Exit here. So this 80% number here that you're seeing says that when the last 15 setups that have looked like this for a long position, when we assess those 15 setups, those setups are saying that this particular setup here historically has resulted in an 80% chance of success. Okay, so I'll say it again. We're looking at the last 15 setups, and if the last 15 setups happen over the last month, which would be very unlikely, it's these last 15 setups have likely happened over the last few years. It's taking those setups, assessing what happened with those and how successful they were, and then making a judgment call on what it thinks the success rate of this particular setup will be, considering everything else that's happening in the market. So you can see here the close on this particular date, 65.42. We're slightly higher, 67 and change right now. Is the AI predicting that there would be some kind of shock or geopolitical tension? No, it's not. It's simply looking at what has happened in the past. There may be a situation where it's serendipitous in that we're having these kind of setups in the past when we've had geopolitical tension, and that's fine. But I'm looking for setup. So this is a conversation that Vince and I were having on Thursday or Friday. He was saying, when I have 20 different setups when I use the screener, I can't possibly take all 20. I need a way to segment, or I need a way to filter the stronger setups from the weaker setups. And I've done this on Velocity. I think I can do this on Victory. I think it would likely translate as well. I'll give you an update on that as I work on that. But this is ready for you to test. So if you're listening on the video or watching the video, just send an email, or you can post it in you can send me a private message on the Teams channel so that we're not sending notifications to everyone. You can send me a private message with your TradingView username, and I will set you up on this. And before you ask, yes, the screener is all set up on it as well. So this is what the screener looks like. So the indicator will be called the Dual 3D AI screener. Not my choice of name. This is just what TradingView or what Gemini came up with. So if I choose, pardon me, if I choose the indicator and I scan, this is just my regular watch list. You're all familiar with the 260 some odd names that we've looked at. So EMA to top band, these things are all self-explanatory, and these things for me are not all that useful. But when I click on the other filters, so what I'm going to do here is uncheck, 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 uncheck. And what I really want to know is, do I have a new main long signal? Do I have a re-entry? And do I have an exit? Now, before you ask, and this is the question that you should be asking, is, Raul, can we not have the AI percentages listed beside main, longs, and shorts? The short answer right now is the screener is not able to do that, because there is a bit of a disconnect between what the screener is evaluating versus what the chart is evaluating. Okay. So this is a work in progress. We'll likely have to do this on an independent screener if we want that. So let me just do this. And let's just look at the re-entries from now, sort by descending, and there should be two. There are. So Walmart is one, SLV is the other. And we'll look at those in a moment. But this is, you'll set this up in your watch list the same way. So when I send you the access to the system, you'll set that up as a favorite, and then you will be able to screen for it in the exact same way. Okay, so go ahead and kick the tires on it. Let me know what you think. I've found these numbers to be somewhat helpful. And what I'm doing with this is, because I'm trading this with options, clearly we all want 100% accuracy, and these numbers are not, this is not a crystal ball. This is just looking back and seeing what has happened and what is likely to happen if history is any indicator. So we're going to take a deeper dive into looking at the SPY and seeing how these signals have done in the past. And you'll see that some of them work out really well, and some of the ones that have low percentages end up failing. So the system looks really interesting. And again, it's not any magic on my part. The only magic here is that the system that I've set up for an entry is now being judged against the last 15 entries that have looked the same. And if you'd like next week or at some point, I can do a short programming session on Gemini in and show you exactly how you can program not only this kind of system for yourself, but really anything that you're looking at. The limitations here on TradingView are that this is a very historical kind of a situation, uh, historical kind of analysis. I'm looking for something that, yeah, this is a good start, but I'm looking to add something to this, which has a little bit more predictive power. And I think for that, we'll have to move into a Python type of environment, maybe code something there, and then bring it into TradingView just for display. Okay. So going to the SPY, and let's just go back and look at some of these signals here. So there is an there's a reentry there, success at 53%. For an ETF, 53% for my testing over the last couple of days is actually not that bad. If it's sub 30%, it's something that I would want to stay away from. Now, here's another one. So remember, what we're looking for here is the chance of moving up 5% before hitting an exit. So I think in this case, we go from 670 to 688, which is about 3%. So this one, while it works, it hasn't worked. It didn't work that well. Let's go back a little further. So there's a 40% move there. Now in this case, I would be looking at the distance from here to my stop loss level, which is at 559, from 588 to 559. Is this a trade that I would take? I would probably pass on this. And yes, I would miss this move. But if there was another name on that same day that was doing a little bit better, I would have caught that move. So let's go a little further. So there's a short, and that one is listed at 33%. And you can see that this one fails pretty quickly. So we stay away from that. Here's a high percentage one, 67% on this particular short. And we go from 555 and get to as low as 482 pretty quickly. Re-entry here at 60%. And we go from 601, get to 614, and I think we get closed out right around where we got in, 594 or so. This one was not a good setup historically. This one I would have stayed away from. Let's go back a little further. There's one that's 60%, a good setup to have taken. So from 517, we get to 564. And then I think this is a turn that we had recently. So this is a main entry, 67%. And we go from 436 to 524 or so. Even if we waited till the exit, it's at 505. So I'm finding this useful, but I would love for you to tell me how it's working for your trading and whether you're finding it useful or what we can do to enhance it for your specific trading. Okay. So that's SPY. I want to go back to crude just for a moment here. And you can see when we got this entry here, a lot of crude names, especially the drillers and refiners, they had already moved quite a bit. And XOM is a perfect example. And there's a 67%. So what is that? 10 out of 15 of the last trades that look like this were successful. So 123, my stop loss would be at 118. It's about 3% or so to the stop loss level. Combine that with the historically high accuracy or success rate, this is the kind of trade that I would want to take. And you can see how well it has worked here. So XOM has done really well. ConocoPhillips likely has done really well. Where's the last? You see how the chart takes a little longer to load? And this is a good example here. So there's that entry there. You can see it's 40%, fails pretty quickly. And then this entry comes in at 60% and 60% chances of historical success. And you can see that this works out well. So these are the kind of numbers that I'm looking at. And this is the kind of analysis that I'm doing here And again, I'd love your thoughts on what you'd like to do. XLE was my favorite of the ETFs, and I had mentioned this on a video 2 weeks ago that I regret missing out on this trade here. And this is the initial entry would have been back here at 47%, but you can see the contraction of the ribbon. So I'm willing to take a risk here on this trade at 44, knowing that my stop loss is 1% away and that it does move well in my favor. And if I am trading this with options, I make some money. Yes, I get closed out and then I get back in, or I make a decision of whether I want to get back in or not. So be careful because sometimes, and as I said, this is not a crystal ball. This is just an indication because sometimes you will miss trades that look like this. So 40% from 47 down to 44. Maybe it's a little too much risk for me on the ETF, but I would give this trade a strong look because it has broken above those previous pivot highs. If this number was 60, this would be a no-brainer. 60 or above, this would be a no-brainer kind of trade for me. So what I would like you to do is look at this and tell me if we should increase the number of periods that we should be looking back, whether it's 15. The right number is, from a programming perspective, the right number is somewhere between 10 and 20. But we could kind of take this to the infinite and look at however many bars there are and however many we've had since the beginning of time. But the markets have also changed. So the market in the 1980s is different than the market here. So XLE, I continue to like. I'm waiting for a proper pullback. I suspect Monday or tomorrow that this will take off a little bit. When it does come back and give me another proper entry, that's when I will consider XLE. Silver. So go with the futures here. And the futures are still below that ATR level, so I'm not doing anything here. Our last silver re-entry was there at 47%. So considering where the stop loss level was, this is a trade that I would have taken. SLV, if we go to the ETF. So this one is interesting. This one is tomorrow or Monday when we open up. Tomorrow is Monday. When we open up tomorrow, we could be above the ATR, and this could be a reason for me to add to my current position. So my current position on the journal here is still the 100-110 call debit spread for June. And now that we're into March, this will require some kind of adjustment shortly. My position in my retirement account, which is a longer term hold, it's meant more for an investment than a trade, is the 75-100 caller, which costs, or which has a max risk of $4. And so it costs 79 to put the trade on. The guaranteed out is at 75, and the max upside is to 100 between now and December. So if I can go from 79 to 100 as one part of my lower risk speculation on silver, I'm happy with that. But I may consider adding more depending on how we look tomorrow on SLV. GLD. So you can see the chop fest here in GLD. And this was one of the reasons why we wanted to, or I wanted to add some kind of other filter to see how we can stay out of this area here. A simple technique, of course, is just using pivot highs. I think we had drawn one there for a previous analysis. And when we break above those pivot highs, as long as it's within my risk loss tolerance, it's a trade that I would look at. What did we do here? So was this over 50%? So this is 53%, and that trade worked out. So let's go back a little further. And so gold, you can see the history on gold hasn't been good when we're getting these kind of entries where we're trying to time it. But I suspect that these new data points are going to now start impacting future data points. So be on the lookout for that. Bitcoin is interesting. So we had drawn in this wedge on Sunday last week, and as soon as we drew the wedge in, when the market started trading, when everything else started trading around 6 p.m., you can see it broke out, and then it kind of comes right back into that wedge area here. So now, if we were to take our trend lines and looks like we've got another bit of a wedge that's happening here. So once we break out of this level, when we did break out of here, it sort of failed, came right back in, and now we're starting to build a bit of another wedge here. I did see a big leverage trade that showed up on, is it Hyperliquid, where it was 40x a Bitcoin long position that with the price where it is, it actually may have been liquidated already. I'll take a look because the margin was the margin for error was very, very small. We can talk about that in the session tomorrow. Trades this week that we had, Walmart. This was a trade. So in hindsight, with this indicator, I would not have taken this trade. This is one I did take, but it was a small loss. So $1.85 for the debit spread that we had, and the exit was at 157. This trade here, this one is a little bit more interesting in that we've overcome this previous pivot high, and I have higher hopes for this trade than in hindsight for this trade here. So I'll have another look at this tomorrow. The other trade that I had to close out was FITB on this move here. So if you recall, we had gotten into FITB here on after this move here. So I think it was right at midday, right around here, 50-55 or so. We had a good first day, and then we had a good third day. And then finally, at this point, rolled it to the 60 call. We had the 55 calls. We rolled it to the 60, which eventually did fizzle. So there was FITB 1, 21%, and FITB 2, which was 147%, then finally closed out that 60 call for 40 cents. We had bought that for $1.20. Okay, so big news, of course, to wrap up was we had the Iran conflict over the weekend. I'm watching oil and gold, less so silver for next week to see how the market reacts to what I think will be a volatile Monday and Tuesday at least, as more news comes out, as the market reacts to the news that's taken place or the events that have taken place over the weekend. So I'll be looking at that, and I think option prices are certainly going to be reflective of the increased volatility that's in the markets. Vince and I will look at monthly setups tomorrow in the market chat. And again, if you would like access to the new indicator with, there's one there on FITB, you can see that this one fails. It's a 13% chance of success. It fails very, very quickly. So there's a good one there at 80, and that one also fails pretty quickly. So bottom line, it's ready for you to test. And if you would like us to make adjustments to it, let us know. If you're finding it helpful, let us know. If you're not finding it helpful, also let us know. That's it. I'm back tomorrow with our next market update, market chat at 1 p.m. Eastern. That's Monday, the 2nd of March. We hope you can join us then. In the meantime, we always wish you profitable trading, the very best of health. We will see you tomorrow.